Welcome back to another Lumley trading video. In this one we are going to be doing some in-depth stock analysis, or at least technical analysis, over on natural gas. Now, one thing I did want to point out, because if you're watching this video you're probably more focused on the futures side, or at least news related, and I did just want to say in the description we do have our newsletter. We do post out trade ideas which are only news related, and again today's one was on non-farm payroll, released over 2 hours ago on the 8:30 release. Exactly our trade plan, and like all the ones we posted this week, we've released 7 trade ideas this week. Every single one has been to plan, so definitely check those out if you're interested, because you could catch these kind of moves, or how we're looking to catch these moves. But I won't bore you anymore. We'll get straight into the natural gas analysis. What are we looking at going further? So obviously we are down 3% on the day, but obviously we're looking at the bigger moves. Where is the high probability trades? On the left we have the 6 month, on the right we have the 1 year chart. Now what are we seeing on natural gas? At 6.420, and also at we can see here at 6.5 or 6.5. These are our first deviations on both the 6 month and the 1 year chart. Now this is key to note, because again this is a heavy layer of support. Yes, we've broken through, we're coming back to retest it. This is what's going to be key, because we're getting this retest. It's can we hold? Because if we can hold, good chance that we bounce back up to at least 7.6. So again, that could be some really good upside potential. I mean, that is a 16% move. Obviously you're not going to catch the bottom to the top, but if that is the kind of trade opportunity you're looking at, again, you don't ever have to risk massive, maybe just below that low. You could be risking about 5% to make around 15. You know, good 1 to 3 risk to reward on that. So those are the key levels we're paying attention to, kind of closest to where we are now. Now, if we break this level, and again, use this as a zone, not as kind of individuals, but if we hold this zone, or break through this zone, come back to retest it as a resistance, and it holds, we push down lower, the targets are going to be 5.2 to around 4.8. Again, you can, if you want, use this as a zone that a bit wider, so it might be a bit difficult, because that range is around 7%. So yeah, a bit too big to use as a range. So the first time we hit it, again, would expect a bounce. If we come back to test it again, then what you're waiting for is we break through it, come back to retest it as a resistance, and if that holds, push further. 480 will be that next target. If we continue lower, we're looking at 3.995, then on to 3.1 as kind of a final support level to the downside. Now on the other hand, if we end up bouncing off this level, we break through what is considered fair value, which is if we put this as a zone, because this is, no matter how big this is, you usually use this as a zone, between 7.6 and 8.2. This is our statistical means on both the 6 month and the 1 year chart. Now this is what is considered fair value on a stock, and we don't tend to trade at this level, because the reason for that is if it's fair value, it's not overbought, it's not oversold, so direction is going to be a lot unclear. Well, it is going to be unclear because you don't know which way it's going to break. So it's definitely something I stay away from when we're within that zone. And again, it's a level where I will trade to, but not off. So if we were going long here, for example, that would be my final target, but I wouldn't look to play a reversal off that level. Now, if we break through this fair value zone and break higher, I'm looking at resistances from 8.825, breaking through there, and this will kind of be a nice level at around 9.9 to around 10.05. Again, use this as a zone because they're so close together. This is our second deviation on the 6 month and our first deviation on the 1 year. This will be a heavy layer of resistance, and we can see it's actually the 52-week high as well. We did try and test this level multiple times and keep failing. So if we come into that level, really be keeping note. Could be a really good short bias opportunity. If we do break that for any reason though, we are then looking at 11.26, going on to around 11.64. We then have some final levels at 12.5, going on to 13.35, and a final one at $15. Now, there is a lot of supports here. Well, a lot of support and resistances. We have a lot of levels. Now, some people ask, why do we provide so many levels? And it's to be prepared. Again, I don't want, if I have a bias on a product, I don't want that to affect you as a viewer. So if I'm long bias on it, I don't want to only give long bias targets, because if you're a short bias trader, that has no help really to you. So what we instead do is, again, these are all standard deviation levels. These are where algorithms are going to trigger, where big money and this is why you will tend to see big volume increases at this level, because it's either, you know, banks or institutions either cutting shorts, well, again, either covering shorts or playing direction. Again, it doesn't really matter what they're doing. You have to be watching that live to see what they're triggering, but you just know volume is going to increase into these levels. So that's why we really pay attention to them, because it can provide a really good risk to reward and trade opportunity. So again, whether you're trading to the up or down side, that doesn't matter. All we're paying attention to is the level, really. So right now we're at around 6.5. Can we hold this level? This is our only focus. If we can hold it, we're looking for a move to 7.6. On the other hand, if we break through, what I'd be waiting for is that retest, because you tend to get that 9 times out of 10. And if you get that retest and it holds, again, you can have quite a tight stop. You just have it above this range. You wouldn't have to be risking much at all, maybe a few percentage points. And then you could have a target all the way down to 5.2. So again, you can get some really good risk to reward, even if your stop's here. You're risking, say, 5% on the high end, to look for around 18% upside. So again, near enough a 1 to 4 risk to reward in these kind of trades. So that's how we use these levels. It's where we know high volume is going to come in. And again, if we're getting that confirmation, we can have tight stops, play direction, or again, if you tend to prefer a bit more of a scalp trade, the first time you hit these levels, you can play the bounce. So again, we hit this one previously, so I would have avoided this one, but it still looks like it's provided its bounce as a scalp. But if we break through this level, again, the first time you hit this level, look for a scalp opportunity. You get that near enough all the time. So that's even back here. Hit that level, scalp. Again, that's the minimum. And the way you can actually trade these scalps is you play the scalp, you lock in some profits, you move your stop to break even. Let's say you lock in 50% or 20% of your position, depending on how you want to trade it and how much size you want. But you lock in some of your position, you move your stop to break even. So worst case scenario, you get out the trade with a small win or near enough break even. That's fine. But in the chance you catch a reversal, which again isn't unlikely if you're trading at these second or third deviations, then you can, get the bulk of this move. Let's say you got in here. Let's say you got in very late for some reason. You got in all the way here. If you're trading to that first deviation, again, that's 13%. That's your first kind of key target. But if you're holding to the final target, which again, you probably do use scale out of that position, you're not just going to close it all the first time you hit a resistance. But if you can hold it all the way to the other, that's 30% upside. And how much are you risking? On the high end, because again, this is getting in very late, you're risking kind of 9%. But really, again, it's a scalp. You're getting in the second it hits it, you're putting in a tight stop instantly anyway. So, you're maybe looking for a percent or two to really stop. So, on these kind of ones, that could, in this example, be like a 1 to 60 risk to reward. Obviously, that's quite crazy, but these are kind of the opportunity these levels can provide. You don't have to be right every time, even though these do predict. And if you go back, watch any of our videos, you'll see how accurately these predict it. But even if you're right, say, half the time, 50% of the time, which again would be definitely on the low end, even if you're right 50% on this kind of strategy, it's fine, because you can get usually much better than a 1 to 5 risk to reward. So the opportunity's there, even if you didn't see the accuracy there. But again, the accuracy's there and the risk to reward's there. That's why you always see me do. If you've been on this channel, I think we've been doing this channel for nearly 2 years now. I think the majority of these 2 years we have been doing all our analysis through this way. And you go back 2 years, I wasn't getting paid on YouTube. It's not like I'm just going to be doing this for videos for 2 years for really no reason. There's a reason we've been sticking with it so long. You also have other YouTubers out there. Boiler Room Trading, for example. They do the standard deviation strategy. Why would they be doing it? Again, they trade it in a different way to me, but they really follow the same thing. They know what levels are going to be impactful, and that is these standard deviation channels. Why would people stick with it if it didn't work? So again, you can always go and do your own testing. You can even go and watch videos back from 2 months. I think we had a natural gas video on about a month or 2 ago. You can go and check out those levels, see how did it react. That's always going to be the best evidence, is how did it react. You can go and test that all yourself. The videos are always there. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.